Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening. India and the European Union finalize a landmark free trade agreement 19 years after the negotiations began. 99% of Indian exports and 97% of European imports will see tariff cuts. The deal is expected to be implemented by 2027 after the European Parliament's consent. India cuts the tariffs on car imports from the European Union, costing over 25 lakh rupees from as high as 110% to 35%. Concessions will apply to 2.5 lakh vehicles annually. Duty reduction for electric vehicles will take effect 5 years after the deal is signed. India's textile, footwear, chemicals and marine exports to the European Union will be tariff-free once the deal is signed. Base metals, chemicals, gems and jewellery, consumer goods and exports of toys will also not face any tariffs. Wine, spirits and beer from European Union set to get cheaper. Olive oil, chocolates and processed foods like biscuits and pasta will also get cheaper. Agri and dairy sectors excluded from the trade deal. India and the EU agreed to establish seamless access framework for services professionals. Work and mobility rights will be ensured across 37 sectors and extended to families as well. Young Indian professionals graduating from European universities get a guaranteed window of 9 to 12 months to seek employment. The Sensex and the Nifty recover in late trade after a volatile session. The rupee gains against the dollar but remains close to the 92 mark. Gold prices soar past $5,100 an ounce, extending the record rally. Asian Paints delivers an operational beat in Q3 even as revenue declines. Tata Consumer reports a 15% rise in revenue. Both companies report margin expansion. Axis Bank considers acquiring promoter stake in Credit Access Grameen, which is India's largest microfinance institution. Sources say the promoter stake could be valued at around 14,000 crores. That's an exclusive. Adani Group joins hands with Embraer to build a regional aircraft facility in India. This is the first ever deal to make commercial aircraft in India. Investment outlay and proposed location is yet to be disclosed. Boeing reports $8 billion in quarterly profits after stepping up production and deliveries of commercial jets. Boeing's order backlog stands at a record $682 billion. General Motors reports a $3 billion quarterly loss due to write-offs from its EV business, even as operating income beats estimates. Another week, another tariff salvo. President Trump targets longtime ally South Korea, hikes tariffs from 15 to 25%, saying the country has not lived up to the deal reached in October last year. President Trump pivots on his immigration crackdown after a second fatal shooting in Minnesota. Within 2 weeks, Trump's Border Patrol commander will leave Minnesota, signaling a potential change in immigration strategy. Well, the big story this evening, it is the mother of all deals, and that is what they're calling it. 19 years after talks were initiated, India and the European Union have finalized a landmark free trade agreement. Now, the deal is expected to be signed only later this year after it undergoes legal vetting and is ratified by the European Parliament. So today what has happened is the talks have concluded and an announcement has been made. Remember, 27 nations are part of the European Union bloc. The FTA was finalized in the presence of Prime Minister Modi and the top EU leadership in New Delhi. If all goes well, the trade agreement should come into force by 2027, and it is expected to reduce tariffs on 99% of Indian exports into the EU and 97% of European shipments into India. India and the EU have agreed to establish a seamless access framework for services professionals. Work and mobility rights will be ensured across 37 sectors and extended to families as well. That's not all. Young Indian professionals graduating from European universities get a guaranteed window of 9 to 12 months to seek employment. Now, speaking at the joint press conference, Prime Minister Modi said the EU deal will strengthen global supply chains. EU Commission President Ursula von der Leyen said the mother of all deals will create a free trade zone for 2 billion people spanning India and the EU.
आज भारत ने अपने इतिहास का अब तक का सबसे बड़ा फ्री ट्रेड एग्रीमेंट संपन्न किया है.
We did it. We delivered the mother of all deals.
The European Union and India stand together as a strategic and reliable partners.
This visit is extraordinary. It goes far beyond a free trade agreement.
Now let's quickly get you a snapshot of the broad contours. First, let's focus on the automobile sector because this has been the big deterrent. This is why for many years this deal has been held up. All made-in-India cars will get duty-free access to the EU once the deal comes into effect. India will cut tariffs on EU cars with a landing price north of 16 lakh rupees to 10% eventually. Now, this would apply to a quota of 2.5 lakh vehicles annually. EU's Trade Commissioner Maros Sefcovic told my colleague Parikshit Luthra that the quota for the Indian auto industry would be over 6 lakh vehicles a year, and the agreement will have a review clause that will come into play depending on the market dynamics. Take a look.
We've been looking for the mutual win-win, and in the end we decided that we have to respect the size of our market. So European market right now is 2.5 times bigger than the Indian one. And we also understand that India wants to develop its own manufacturing capacity. So we've been really playing with the numbers, with the projections, and in the end we ended up with a quota for European car makers for exports, then additional quota for completely knocked down cars. This is very trade language, the CKD cars. Plus the parts, and the quota for Indian size would be corresponding to our markets 2.5 times bigger. And I see it as an opening because we know that the dynamism of Indian market is such that we agreed to future-proof our agreement, and therefore we will have a review clause which can also adjust these quotas according to our both agreements in close link with how the markets on both sides would develop.
Right. So currently, tariffs on imported cars, fully built imported cars, are in the range of 70% and 100% in India. How does the tariff on cars exported from Europe into India come down? What will be the level to which it will come down immediately? Yeah.
Once the agreement is in place, so it will drop down from, I think, the 110% right now to 35%, and then gradually in the transition period it should go down to 10%. We agreed to have a little bit different timeline for combustion engines and battery electric vehicles because we know that it takes longer to get these cars online and to simply make them important part of our mutual trade. We also are reducing from current level to 8.25% the tariff line for the CKD cars. There, I think it's again very important because it would allow the European car manufacturing to kind of strengthen the production line, manufacturing capacities, assembly lines here in India, and we have parts in the deal which will be fully liberalized. So I hope that this would create enough of a space to really start an open new chapter in manufacturing, in car production, and I think that this is the good news again for both India and European Union that we can work in such an important part of the industry.
So that's a big win for European car makers. So automobile exports from the EU will get cheaper once this deal is signed. But what about other goods? Medical and surgical equipment from the EU currently faces a tariff of over 27%. That will be brought down to 0, so that opens up a big market. Electrical equipment and aircraft will also not face any tariffs under this deal. Wines, beer and spirits from Europe will also get cheaper. Tariffs on spirits will be reduced from up to 150%, which is the current rate now, to 40%. The tariff on beer will be cut from the current 110% to 50%. Even non-alcoholic beer will not attract any tariff. Olive oil, which currently attracts a 45% tariff, will also be duty-free. Kiwi and pears from Europe will face a 10% tariff compared to the current 33% tariff. Processed foods, including pasta, cakes, biscuits, along with the Swiss chocolates, will see their tariff cut from the current 50% to zero. Mutton will see a tariff reduction of 33% to zero. Sausages will see tariff being cut from 110% to 50%. So that's what the EU gets broadly as part of this deal. Now let's talk about Indian exporters. Now, what will get cheaper for the European Union? Marine exports like shrimp and lobster will now attract zero tariffs, so that's a big win for Indian exporters. Chemicals, footwear, apparel, textile, consumer goods, base metals, toys, sports goods, gems and jewelry will also be tariff-free. So remember, all the labor-intensive sectors now get a big fillip. They will now be in the tariff-free category if they were to export to the EU. India Inc. has given a thumbs up to the FTA. Industry leaders that we spoke to will, of course, share their views. That's coming up for you in the next few minutes right here on CNBC-TV18. So a deal with Europe has been sealed. What about the US? Petroleum Minister Hardeep Puri says is positive on a potential deal. Speaking to CNBC, Puri said negotiators have told him that talks are at advanced stage.
Trade negotiations underway with other countries, including the United States. As somebody who's been a professional diplomat all his life, who believes in the multilateral system in trade, I'm looking forward to all of these getting negotiated quickly because...
Okay, about the US.
I said, it's, no, I keep
waiting for information.
No, you see, it's work in progress, and therefore, it goes through various, sometimes publicly aired, commentary, which I always try to avoid. But I'm told by the people who are in it that it's at a very advanced stage, and I'm hoping that sooner than later, that will also see the light of day.
Well, that is the Petroleum Minister Hardeep Puri. Now, President Trump has said that he will raise tariffs on South Korean imports to 25% from the current 15%. In a social media post, Trump said he's taking the measure as South Korea's parliament is yet to approve a trade agreement finalized last year. The higher tariffs will apply to a broad range of goods, including automobile, lumber and pharmaceuticals. South Korea's ruling Democratic Party had said it would pass a specific act on the U.S. trade deal by the end of February. Seoul has also called for urgent talks with Washington. On to the day's market action. A volatile day. The Wall Street staging a smart recovery in the last hour, ending a volatile session near the day's high. The Nifty and the Sensex finally closing 0.5% higher, with the Nifty closing 126 points higher. Sensex up by 300 points. And, of course, the Nifty Bank and the mid-cap index, the Nifty Bank was the outperformer, up by a little over 1% today. So that was the story as far as the markets were concerned. In the currency market, the rupee recovered 22 paise, ending the session at 91.72 against the dollar. The currency was helped by a broadly weaker dollar and a boost from the landmark trade agreement between India and the EU. 91.72. Look at the way that the currency has moved through the course of the day. Gold prices, meanwhile, scaling fresh peaks, hitting another record high. The yellow metal surging past $5,100 an ounce, extending the historic rally amid safe haven buying driven by rising geopolitical tensions and global uncertainty. Several experts now say that gold could climb to $6,000 an ounce in the near term. And of course, silver continues to be on a tear as well. Oil prices rising after the U.S. fleet of ships entered the Gulf region as tensions build with Iran. Traders also monitored the potential output disruptions after a colossal winter storm in the U.S. However, outlook for plentiful supply limited gains. This is Kazakhstan's largest producer is preparing to resume output while Chevron works to bring more Venezuelan crude into the market. On to earnings. Asian Paints delivered an operational beat in the third quarter, even as revenue has declined. Gross margins expanded by 200 basis points. EBITDA grew 9%. An exceptional loss of 158 crore rupees dented the company's bottom line. Growth of local decorative volumes also fell short of estimates, despite that growing 8%. And Tata Consumer also posting a strong performance, meeting estimates, revenue up 15%, profits up 36%, margins expanded by 140 basis points, while revenue from the company's food business grew by 19%. However, the company's beverage business grew at 3%, missing estimates. Adani Group has joined hands with Embraer to build a regional aircraft facility in India. This is the first ever deal to make commercial aircraft in India. Investment outlay and the proposed location yet to be disclosed.
with Embraer and Adani, we're both very proud to have, started our partnership and participating very seriously in the Indian aviation ecosystem, or even the regional aviation ecosystem. And we're very happy to have found partners like Embraer. We think alike, we share similar values, and we have a shared vision for what this industry could be over here. And we're looking forward to grow this partnership forward.
Axis Bank is considering acquiring the promoter's stake in Credit Access Grameen, which is India's largest microfinance institution. Sources say the promoter's stake could be valued at around 14,000 crores. That's an exclusive. The government has convened an all-party meeting to discuss ways to ensure smooth functioning of the two houses during the upcoming budget session. Opposition parties questioned the government for not sharing the legislative agenda. Parliamentary Affairs Minister Rijiju has said the agenda will be shared later. The first phase of the budget session kicks off tomorrow. The government will table the union budget on the 1st of February, which is a Sunday. Up next, India Inc. gives a thumbs up to the India-EU FTA, which was finalised in the capital today. The industry roundtable on what this mother of all trade deals means right after the break. Amazon has announced 16,000 job cuts in a fresh round of layoffs. This is the second round of mass job cuts since last October. The company has told most US-based employees will be given 90 days to look for a new role internally. Those unable to secure a position or who choose not to pursue one will receive transition support, including severance pay. That's the latest from Amazon. Back home, electronics maker Boat has delayed its IPO for a second time. Sources tell CNBC-TV18 the issue has been deferred because of market conditions and lack of internal preparedness. The company's founders, Aman Gupta and Sameer Mehta, stepped down in November last year. Auditors had also red-flagged a mismatch in financial statement to lenders. Now, India's economic momentum depicted a steady improvement in December. According to the latest Money Control Eco-Pulse Index report, the index stood at 53.7, which is above the 50 mark. That signals stronger than average economic conditions. The uptick was driven by higher GST collections, a recovery in electricity demand, and increased vehicle sales. However, UPI transaction volumes and aviation turbine fuel consumption recorded muted growth, the first of the Money Control Economic Pulse surveys. There's intense ownership churn brewing at the dugouts of three IPL franchisees. While Rajasthan Royals and RCB are scouting for a new owner, Shah Rukh Khan may end up owning a much higher stake in Kolkata Knight Riders. Rachna standing by with more. Take us through what's happening behind the scenes in the dugout, Rachna.
That's right. Three marquee IPL franchises are at the centre of an intense ownership churn. Royal Challengers Bengaluru and Rajasthan Royals are at a comparatively advanced stage. As per reports, Rajasthan Royals have received a preliminary bid valuing the franchise at around $1.3 billion. Now, reports also indicate that the offer has come in from a consortium led by US-based investor Carl Somani, who's already a shareholder in the franchise. Along with that, three other consortia are in the race. This includes one led by Times Internet chairman Satyan Gajwani, and others are backed by global private equity giants Blackstone and Carlyle. At RCB, though, promoter United Spirits, owned by Diageo, has formally kicked off a full sale process and signed non-disclosure agreements with multiple bidders. Now, sources say interest has come in from a mix of Indian billionaires and global investors. This is also in line with what we had reported earlier, that among the prominent names are Serum Institute chief Adar Poonawala, as we had reported. Apart from him, there is Zerodha co-founder Nikhil Kamath, Manipal Group chairman Ranjan Pai. Early stage interest has also been seen from global private equity giants. Clearly, a lot of global private equity taking interest this time around in IPL franchises. Now, this also values RCB between $1.5 and $2 billion. A binding transaction is expected within the current financial year, is what we're understanding from our sources. The third one is Kolkata Knight Riders, which is not up for a full sale, though. But the move here is limited to a possible minority stake transaction by the Mehta Group, which owns a significant portion of the team right now. Now, it is understood that they're evaluating monetization options and hence the sale process. But what we also understand from our sources is that Shah Rukh Khan, who's the co-owner on the team, is also considering buying Mehta Group's stake, which will take his overall stake to a much higher percentage, to almost about 90% of the team. Now, though talks are fluid at this point, we will definitely keep an eye out for that. But the common thread across all three is timing. With IPL media rights locked in, revenues rising, and franchisee valuations peaking, owners are looking to capitalize on rare sellers market in Indian sports businesses. Back to you.
All right, Rachna, plenty going on there in the world of IPL. Now, India's largest aviation summit, Wings India, takes off in Hyderabad. Boeing projects annual growth of 7% in India for the next 20 years. Regional jet maker Embraer has displayed 2 commercial aircraft after signing a partnership with the Adani Group. Madiha gets us all the action from Hyderabad on India's ambition of becoming an aircraft manufacturing hub.
Among all the jets on display at Wings India are 2 planes that are made by Brazilian aircraft maker Embraer. They are regional jets, and on the left you see is the E175 that is used by Star Air, which is an Indian regional airline, and on the right is the E195 E2 by Honu Air. Now, Embraer has signed a partnership with the Adani Group to assemble one of these aircraft in India. Details are still awaited on the location and what the final partnership will look like. But speaking to CNBC-TV18 about why Embraer has chosen India for a final assembly line outside of Brazil, Aryan Meyer, the president and CEO of Embraer Commercial Aviation, said that they see demand for about 500 regional jets in India in the next few years.
If we look at the size of the country and the number of airports that will be developed, we see a need of at least 500 aircraft in our segment alone, right? So that's the up to 150 seat segment that we are active in. So that's a big number.
Apart from the Embraer-Adani deal, there was another Make in India announcement by Russia's UAC to assemble the SJ-100 passenger regional jet that you see behind me in India. They've signed a deal with HAL, and sharing details on the partnership, HAL CMD told journalists that they're looking to set up this assembly line in the next 3 years, and parallelly they will also lease 20 such aircraft, 20 SJ-100s in flyaway condition. These partnerships are being closely watched by global giants like Boeing and Airbus. Salil Gupte, the president of Boeing India, feels that final assembly has a very limited role in the overall value chain in aircraft manufacturing, and the bigger part lies in local manufacturing and local sourcing.
This is truly a market like no other because it also has a tremendous capability to contribute to aviation globally. Embraer and then Sukhoi have both announced partnerships with Adani Group and HAL respectively. I look forward to frankly seeing one thing. How are they going to localize production? Because final assembly is an important part of the aviation value chain. The other 93% is very important. And both of these partners, Embraer, Sukhoi, have said that they plan on working on that 93% as well. For Boeing and Airbus, that is where we have been focused.
Well, deepening and broadening the aviation ecosystem in India. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. The news will continue right here on CNBC-TV18. But here's what you need to watch out for. We are counting down to the budget. And so on the 30th, you can catch our special event, the Budget Vision. We've got a whole host of our budget editors joining us to give us their expectations of Nirmala Sitharaman's 9th budget. Industry leaders and more will join us on the 30th for CNBC-TV18's Budget Vision 2026, What India Wants.